Welcome to Weekly Market Research from Fullerton Markets. Let's dive into the latest market trends and insights. S&P 500. The Nasdaq Composite closed lower Friday, extending its weekly loss as persistent weakness in artificial intelligence stocks and mounting concerns over a slowing U.S. economy weighed on sentiment. The tech-heavy index slipped 0.21% to 23,004. While the S&P 500 rose 0.113%, and the Dow Jones Industrial Average added 0.116%, recovering from sharper intraday losses after Senate Minority Leader Chuck Schumer proposed a short-term funding deal to end the record U.S. government shutdown. The political stalemate has fueled uncertainty, with key economic data releases halted and layoffs reaching a 22-year high for October. The Nasdaq dropped nearly 3% for the week, its worst since early April, as top AI names like Oracle, Nvidia, AMD and Broadcom slumped sharply, reflecting investors' unease over lofty tech valuations and limited economic visibility. SPX USD on H8 chart, the index has corrected more than 4% from its all-time high. If the price fails to break above 6,750 and the Quasimodo pattern confirms, this pullback could develop into a bearish trend, with the S&P 500 likely heading towards 6,500 as the first target. CAD JPY. Japan's Prime Minister Sanae Takaichi faces an early challenge as real wages fall for a ninth straight month and inflation stays above 2%, threatening her revival of Abenomics. Despite a 1.9% rise in nominal pay, household purchasing power continues to erode. Takaichi is reportedly preparing a to $13.9 trillion, $92 billion stimulus package to ease cost pressures, but economists warn it could worsen inflation and strain Japan's already high debt. With the Bank of Japan holding rates steady at 0.5%, analysts say persistent price growth may soon test both the BOJ's resolve and Takaichi's political standing. CAD JPY on H8 chart, the pair is undergoing a correction but remains within its channel. If the price fails to break above 109.50 and the Quasimodo pattern confirms, this correction could turn into a bearish trend, with CAD JPY likely dropping toward 107.50 as the first target. Gold price rose on Friday as a softer US dollar and renewed uncertainty over the ongoing government shutdown lifted safe haven demand, while Wall Street prepared for its steepest weekly losses in 7 months. Gold gained 0.7% to 4,001 tons per ounce. The dollar's decline made bullion more attractive for non-US buyers, and analysts suggested the metal may be forming a technical floor after recent volatility. With the government shutdown halting key data releases such as the non-farm payrolls report, investors turned to private labor figures showing October job losses to assess the likelihood of further Federal Reserve rate cuts. Markets are now pricing in a 67% chance of a 25 basis point cut in December, supporting non-yielding assets like gold. Meanwhile, China's plan to reform its rare earth licensing system added to geopolitical caution, keeping demand for gold as a safe haven intact. XAU USD on H4 chart. After failing to climb back above 4,150, gold has been moving in a tight sideways range. It's been 2 weeks since the metal hit its all-time high of 4,380. If it once again fails to break above 4,025 this week, it's likely to trade below 4,000 toward year-end. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets.